Hey everyone, it's JJ from tradingsyndicate.org. How are you doing? Hope you had a great holiday. And now we're back to work. Couple of little things that I'll talk about quickly. And if you want really detailed information on this, and it's very, very helpful for larger size traders and longer time frame traders because there are certain things market profile when you dig deeply into it. Now, I like to trade and use practical profile. But for my longer term traders who need not the surface of just scalping or quick hit and run trades, that's what I usually do. But when I see stuff that applies to a larger time frame, larger size participant, I gotta call it out. I gotta look after my old crews, right? So here we go. Um, Very interesting that we filled the gap on the last trading day of the year, okay? Which was that's when wholesalers mark to market because they have to provide liquidity to the very end. We filled it, and then in the next Globex session overnight, beautiful distribution of that liquidating inventory. I mean, not as much volume as the day, but those players who got trapped long 6,900 down to the low of the end of the year there, they got to get out a good amount and turn that inventory into cash. That's what this business is about, right? Turn inventory to cash, buy more inventory, sell more inventory. Sometimes you got to put it on sale. All right. This time it went on sale. They went long over New Year's and got to offload it a little bit. Now, New Year's Day, markets were closed. Friday, we had liquidation, right? Because we had overnight inventory long. The trade was to the downside. Okay. 68, 64 and a quarter. That level has been very useful. You can see it's very mechanical. So, like it happened here, we hit it twice and then we broke it. Here, we didn't even hit it. Okay. Which makes things a little bit more confusing, right? If you're a shorter term trader, sure, you buy 87, sorry, 68, 74 quarter, and if it breaks those lows, you're out, but then you can ride it all the way up into the close. A lot of people did that, right? That J low inventory correction period. But what I'm seeing is the market closed in the gap. Remember, we filled the gap, but we filled it when a lot of people were not on the desk. So this gave people the opportunity to do some short covering, right? B profile is a liquidation profile, which means liquidation into a B. It's like a catcher's mitt. So here's the deal, right? Here's where the rubber meets the road. I would, if I was a big trader, I would love to look for a look below and fail of 64 and a quarter. If we hold 64 and a quarter, then you can be cautiously long. I mean, we'll use the levels from here down, right? If you're a long trader, your target is Friday's high. That's your first target. Then I would say 69, 63. Okay. And once again, manage your position with size, right? So if you're in with big size and the trade's going against you, get rid of some inventory. Know what I mean? All right. So don't blow all your money on one trade, right? It's just a business deal, right? And there's going to be another one. Take your hoops, take your loss. Loss is a business expense, right? You will have expenses in trading, and risk management is not free. Okay, risk management is not free. Nobody trades and never loses any money. All right, but you guys already know that because you're trading size. Hopefully, my younger traders are listening. Now, looking at this, cautiously long over 64 and a quarter, right? Let's see what happens when we come back to work. Monday is when the first real full working day is. People will be drifting back into the office, but let's see what happens Monday. Remember also, it is the first real, the first real full week. Number two, remember that we did have some news with the events in Venezuela, and I have no idea what kind of order flow that's going to create. So in our trading room, I have scenarios for gap up, gap down. and also short up and down, all that kind of stuff. It's all detailed in our room at tradingsyndicate.org. But I will tell you, watch that 64 quarter. And if we can get over 69.03, then just use these levels if you're long. If you're short and you're a size short seller, well, your out's got to be 40, right? There's a lot of pain between the 6,900 close and 69.40. That's a, that you don't want to take a licking, early in the year, right? Nobody wants to start the year, the very first Globex with a trading loss, right? So maybe just chill, sit back. Let's see who comes in. Let's see who comes into the store, who comes into work Monday morning, if anyone does. I'm sure most people would agree that a look below and fail is the better trade. If that holds, great. If it doesn't, manage your risk. Let's go look at shorter time frame. Okay, so we closed above that gap fill. So use 98. Say you're long, right? Say we open in range. Maybe there's no gap up or down. To have a gap up, we're going to have to gap over 69.44, right? We closed at 40. So a 40-point gap up, I don't know. Gap down, we'd have to be underneath 69.64. So, you know, it's 40 points on either side of this thing, kind of right in the middle of it. So let's see where we open tonight. There are the lower stops at 88 and a half, 72, right? Upper stops. Now, this is really cool. We had single prints to the downside on New Year's Eve. We went right through them the next night because there was nobody to sell there. But look what happened on Friday. We were down here and we were collecting all this inventory, right? Finally, we got that inventory correction rally in K period, right? J period usually corrects inventory lower. Here, it did. It went all the way down, took out every single stop except the existing low of that day, and then just ripped right back up. When we got over that gap fill, right? A lot of people were still probably shorting and using that as a reference. So that forced some covering, and the cover put us all the way up to 69.09 and a half, where those single prints were. So the sellers that would have sold, like if this had been, if this was a day, probably wouldn't have gotten above there on, if the market hadn't closed on New Year's Eve. You see, so now this shows you that there's supply right at 6,900. So if you're long, right, if we get up into there, look for competing sellers, and then the next stop is 69.16, right? So on the short side, you're looking at 68.88 and a half, and then that J low down at 72, right? We have our candle wax, which shows you same thing as TPO, really, right? I just look at from the distribution to liquidation, accumulation, back up, right? And so we have three distinct, you guys like to call them high volume lymph nodes. I just call them positions. So this is the cost basis 1, 2, and 3, and we are in distribution above 68.98. So watch that level as a scalper, right? So say we open in range and in value, right? In range and cost basis, then you can use this to scalp. If we open a big gap up or down, then let it open, let it trade a little bit. Then you can do your balance zones, follow your business plan that we teach you how to do, and then only execute, right? Don't just go off guns blazing. Thanks very much, everyone. We will see you at 7:30 in the morning UK time. Thank you. Have a wonderful rest of your weekend. Come visit us at tradingsyndicate.org. We are the only trading room, the best deal on the internet, where you get to learn how to trade from someone who actually creates charts and has traded size, so he knows how to move price. So we can teach you not to get run over and make some money. And we also have an AI trading coach, which has been schooled by taking in only the best information. So it's not like a vacuum cleaner that picks up all sorts of bad information from the deepest, darkest corners of the influencer world, right? That stuff's it's you know, it's like one of those beautiful Japanese shrubs. It's beautiful. It's trimmed. Everything's clean. So we have that and our trading room. Come check it out. I'm JJ, VWAP Trader One on X, and we'll be doing more videos this week. Thank you. I've got the my annual review, which got a bit delayed, but I'll have some videos out on stocks, crypto, that kind of thing. I kind of also want to see how things, let's see what they got in the tickle trunk tomorrow morning, right? Now, I kind of want to see what the first day or two looks like, and then that'll kind of help us plan shorter term, and then longer term we'll have to expand out. Now, all my longer term stuff is based solely on inventory cost basis and the flow of customers that come in. And so it's always, if this happens, then we do this. If that doesn't happen, then we stay away. If this happens, then we do this. If that doesn't happen, we don't. We have very strict rules for why you enter a trade, and it has to do with the business reason for the trade. If someone cannot explain to you what the business reason for the trade is, you shouldn't be listening to them. Okay? It's a business. There are reasons that we do transactions. It's not just random. Okay? Tell somebody who's got $2 billion at work in the market if everything's random. Yeah, no, I don't think so. Have a wonderful weekend. I'm JJ, and we will see you Monday morning. Bye for now.